Hello, dear viewers. Hope you all are doing well. Welcome to revision time. We are studying Bank Reconciliation Statement, Accountancy, Class 11. In our previous video, we have looked into a small problem on how to prepare our bank reconciliation statement and to tally our both balances, that is, balance as per cash book and balance as per passbook. Today we will look into yet another problem. Let's get started. Reading out the question. On comparing the cash book with passbook of Naman, it is found that on March 31st, 2014, bank balance of rupees 40,960 showed by the cash book differs from the bank balance with regard to the following. So here it has been not clearly given, but yes, when we read out the question, we can understand that the balance of cash book is given and we have to rectify and find out the balance as per passbook. So balance as per cash book is 40,960. Point A. Bank charges rupees 100 on March 31st, 2017 are not entered in cash book. So bank charges are our expenses. So whatever is getting deducted, what expenses are being deducted in passbook are naturally deducted in our cash book too. So this will be deducted. Point B. On March 21st, 2017, a debtor paid rupees 2,000 into company's bank in settlement of his account, but no entry was made in cash book of the following in respect to this. So our point B clearly mentions that there is no entry made in the cash book, because of which there is again the imbalances in our cash book and passbook. So here the debtor is paying, which means there is increase in the balance. So we will add this particular transaction that took place on March 2017. Debtor paid rupees 2,000. Point C. Checks totaling rupees 12,980 were issued by company and duly recorded in cash book before March 31st, 2017, but had not been presented at the bank for payment until after that date. So here point C explains that 12,980 amount, the check of rupees 12,980 was issued by the company. So when we are issuing, we are deducting it in our cash book, but there is no transaction, it is not yet presented for the bank for the payment. So naturally there will be no entry found for the same in our passbook. So whatever we have deducted, we will add it back, that is rupees 12,980. So checks issued but not yet presented for payment, rupees 12,980. So point D, a bill of rupees 6,900 discounted with bank is entered in cash book without recording the discount charge of rupees 800. So our point D explains that a bill of 6,900 is discounted with bank. So if it is discounted with bank, there will be entry in the passbook too, and it is entered in cash book too. So 6,900 balance or the amount is found in our both the books, but without recording the discount charge of rupees 800. So here they have told that discount charge of rupees 800 is not recorded in our cash book. So discount charge is something we will deduct. So discount charge of rupees 800 will be deducted. Point E, rupees 3,520 is entered in cash book as paid into bank on March 31st, 2017, but not credited by bank until the following day. 3,520 is entered in our cash book as paid into the bank but is not credited, and but there is no entry in the passbook for the same. We have not received that amount in our bank account. The bank account is not yet credited, so we will deduct it from our cash book. So it will be taken while when we are deducting the particulars. Next, no entry has been made in cash book to record the dishon or on March 15, 2017, a check of 650 received from Banu. So here particulars which have to be added are taken into account. Now we will deduct the particular entries which have to be deducted. That is bank charges, rupees 100. Next, it was about our discount charges, 800 rupees. Next, entry made in cash book but was not credited. So check deposited but not yet presented for payment, rupees 3,520. The total of debit column of cash book is 55,940. And the total of credit column of cash book is 5,070. So we will balance as per passbook is rupees 55,940 minus 55,070. That is rupees 50,870 is our balance as per passbook. So this was yet another problem on bank reconciliation statements. The transactions were simple, but yet they were framed in such a way to get confused. So when we read out, when we analyzed the transaction, we got to know what have to be added and what were to be deducted. So this is it for today's video. In the next video, we will come again with yet another problem. Until then, subscribe to our channel, share our videos with your friends, and if you have any doubt, you can comment us and we will reach out and solve your problems as early as possible. Until then, happy learning.